Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that this market at the moment is testing a quite strong historical structure level for this market. In fact, this zone was acting as previous resistance here, preceding all this rejection to the downside. Again here, the market tested its zone and rejected it to the downside. And at the moment, we can see how the market is testing exactly the same area, from which there is a good probability to see some potential bearish price action be created and for the market to reject this area to the downside once again. So on the monthly, everything is looking quite bearish. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, the situation is quite clear. If we look at the pattern that the market has been creating, from here we had a massive impulse to the upside, and then after the impulse, the market started decelerating. Now, the shape that this deceleration is currently creating is that of a rising channel. In fact, what we can see is that in creating this move to the upside, clearly the pattern is this one here, which is a rising channel, since we have the impulse, correction, higher high, higher low, another higher high. Now, there is the possibility that after the creation of a rising channel, this is essentially a deceleration of the market. So there is definitely the possibility to see bearish price action getting created after such pattern, because essentially it shows how buyers are losing steam, and instead of just continuing impulsing to the upside, you start to see this slowdown of the market, and then at some point the market is supposed to get rejected to the downside. So by looking at the market on the monthly and weekly, as we have just seen, there is definitely the possibility to see bearish price action be created. Now, if we drop down on the daily time frame, what do we see? Now, here on the daily, first of all, I did speak about gold quite a few times in the past. I spoke about it when we were here. I explained all the reasons for which we could expect this rejection to the upside, which is exactly what the market gave us. Then, after this impulse and correction from here, I explained all the reasons for which I wanted to see the market create this rejection to the upside. And after this impulse here and correction from here, I explained why we wanted to see first a higher high and then a potential move lower. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. However, at the moment, if we look closely at what is going on, from a daily perspective, we can see that the market is not ready yet to continue lower. In fact, as I have just identified, this is a quite important daily structure level. This area was acting as previous daily resistance here, again here, and again here, and then the market has broken it to the upside and is currently retesting it. It is retesting it as support. And until the market will remain above this support, it could easily continue to the upside. However, what we have to remember is that in the market, the best probabilities come when all time frames are showing the same direction. And in this case, the monthly and weekly both seem quite bearish. So the only way in which also the daily time frame would be aligning with the monthly and weekly for a potential move lower is if we get a break below the support. In fact, if we get a break below the support, all this previous support would become resistance here. So if we get the break on the retest of this previous support or resistance, how we could be approaching a potential move lower. Now, before I speak about that, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. Now, if we check the data for gold, we can see that with the last reports, clearly net positions have been increasing. We went from 98k net positions all the way up to 195k net positions, with shorts overall that are getting increased, as we will now see, but longs are getting increased even more than shorts, which is the reason for which net positions are getting increased. In fact, if we look at the shorts, we can see how with the last report we went from 63k to 70k shorts. Longs went from 208k to 266k. So clearly gold is getting longed from an institutional perspective way more than is getting shorted, which is also the reason for which is getting stronger, with the market clearly creating this massive move to the upside. However, it is very important to keep in mind that the increase of these shorts from 66k to 70k is coming with the last report. In fact, with the previous two reports, shorts were getting closed. However, with the last report, shorts are now once again getting added from an institutional perspective. This means that institutions are starting to get once again interested in shorting gold. And if we get a break below the support on the retest, this is a very good area instead of which they could be adding more shorts, bringing the market lower. So we don't know if the market will break. The market from here could easily reject to the upside. However, if we break on the retest, this is where we have very good probabilities to see a potential move to the downside. So if the market breaks below the structure and goes for a retest, how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to $97, one payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you move their trading to them, so if you open an account there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and the price goes back to normal. And directly from here, you can join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.